Hey everyone, and welcome to Earnings Cheat Sheet for Friday, February 27th. It's Alexis Garcia and Ed Carson here, and we'll be taking a look at some key upcoming earnings reports to help you prepare for the week ahead. So, Ed, we got the big one out of the way, but what do you have for us this week?
Yeah, I want to take a look at a few names, including Broadcom, Viking Holdings, and Brazilian jet maker Embraer.
All right. Well, let's start with Viking Holdings, which is scheduled to announce Q4 earnings on Tuesday, March 3rd. Earnings for the cruise ship operator are projected to rise 22% to 55 cents per share, while revenue is expected to climb 20% to $1.63 billion. And here's why we're watching Viking. Capacity and booking levels will be key here. In Q3, Viking had 96% of its 2025 capacity sold, already had another 70% of its passenger cruise days for 2026 season booked. Uh, and it seems like a lot of that is in line with the other major cruise players like Royal Caribbean for recent earnings, basically reported that their capacity for this year is booked out. And I think, Ed, too, what investors are looking at, one of the advantages Viking has is that they don't really rely on heavy discounting. They really go for that more affluent traveler. So tell me about Viking and what you're looking for.
I think that last point is really important. Affluent customer, and we're seeing that with a lot of travel. Airlines, others are saying we're trying to cater to the premium customer. So you have some well-off, often retirees. They're going on riverboat cruises, and Viking, there's a lot of demand. They don't have to provide any discounts. So this has been strong earnings. It seems fairly steady. Obviously, look, things happen and then all of a sudden things fall apart. But while things go well, there's a consistency, and we're going to see probably very strong numbers for 2026. Obviously, the question is, did they beat those expectations for the outlook? Do they beat the whisper number on the outlook? But so yes, this has been it, and it's been probably the, if not the leader in travel, one of the very strongest travel names over the last year or two.
Yeah, and let's take a look at the daily chart here at because I feel like this one has been popping up a lot, especially when you guys talk on IBD Live. Viking is trading just above a buy zone here after a breakout back here at the end of January. That's out of a flat base with a 74.61 buy point. So again, talk to me here about what you're seeing with the action. What would you like to see set up? And if you bought back here at this breakout, what decisions perhaps are you having to make?
Yeah, I mean, it could have a pretty big reaction on earnings, so you just don't know. It could be a negative one because, I mean, everybody's upbeat about it. Well, we saw with NVIDIA, you can have everybody's hopeful and then it beats and then it guides up and you can still fall. So you can't just say, well, the picture's bright. The stock could still sell off. So that is a thing. But for new investors, it's a little tricky because, I mean, maybe if it drifted lower over a few days and got to the 21-day line and then bounced on earnings, or even fell back a little bit on earnings and then moved up, maybe you'd have an opportunity because it's not crazily extended. But if it moves from here on earnings, then it would feel extended. I do like the volume when it was breaking out. There was a number, it was sort of choppy up and down, but the up days, a lot more volume there, especially in those first several days, just giving an indication of things. So even though there was some back and forth, there was a lot of action. It definitely found support at the 21-day line. So that would be a place that maybe if it came down to that in some way, but easier said than done. If it falls on falls on news and it falls on the 21-day, it doesn't seem like the right time to buy. So, but yeah, the RS line's at new highs. Just a really strong and steady picture here.
Yeah, and talking about the fundamentals, we have sort of a mediocre EPS rating here at a 68. The composite rating, pretty good here at an 84. Great accumulation distribution rating with an A minus. So anything that you're looking at here in terms of fundamentals with Viking Holdings?
Yeah, and that EPS rating is reflective of the fact that it lost money in 2023. I mean, that there was a lot of that, and so that is something to watch out in the cruise business. It only goes for so long, and then something happens. But the track record is stronger. So if it has solid earnings for this year, that EPS rating will probably surge up to 95 kind of pretty quickly. Yeah, this is just acting well. The up down volume ratio is a 1.2, which is positive. Along with that, you can just see here on the weekly there was, it sort of came down almost to the 10-week line. a few times here. So it's just been a strong, steady performer over the past year. It can have those drawdowns, but the RS line has had a really strong record.
All right, well, let's move on and take a look at Embraer, which is also expected to report Q4 earnings on Friday, March 6th. Earnings for the aerospace company are expected to jump 212% to 78 cents per share, and revenue is projected to increase 10% to $2.54 billion. And here's why we're watching Embraer. The company's backlog will be key here, and Ed, I think Embraer enters this earnings season with a lot of momentum. Speaking of that backlog, they hit a record with a $31.6 billion backlog. And Embraer typically sees a lot of these deliveries happening in the final quarter of the fiscal year. So it'll be interesting to see the marks they're hitting there as well.
Yeah, and one thing about Embraer, it is odd, is that they have very lumpy earnings. I don't know if I should know, but I don't know if they're GAAP or not. But they're lumpy on a annual sometimes, but definitely look at some of those quarterly numbers. I mean, loss, big gains, big drop, huge gain is expected this quarter. Revenue growth has been steadier. It's slowing down a little bit, but the backlog suggests it should be strong. But earnings are supposed to fall again in 2026. Now, maybe that's because there'll be a big, maybe in December in Q4 2026, it'll have tough comparisons. But again, that is something to note. You can't just, so there could be a surprise, on this number. Some of the tariff things that have been out there, those seem to be in the past. I mean, they were largely exempted from the big tariffs, and now the new global tariffs that the Brazil tariff of 50%, they were already sort of exempted from that, but now the global tariff means that it's probably going to be 10 or 15%, for Brazil. So that's a positive. But yeah, so the backlog is strong. They should have strong growth record. It's just doing that and then delivering that backlog is what people are going to be looking for.
All right. Well, let's see what the chart can deliver here, Ed, because Embraer broke above a 67.44 buy point back here on January 5th, had a nice run up here to the 80 level, and then pulled back. It seems like it tested the 50-day line a couple of times here, and now looking at the 21-day line as a key level of support.
Yeah, so this is probably a couple of weeks away from a base, not that deep, but too deep to be a flat base. What's nice here is like it does seem like the 50-day line, that breakout did work because it never did quite under round trip, but boy, it came close, round tripping there. So buying it off the 50-day line can make a lot of sense because you look over the past year, there's been a few breakouts, and sometimes it moves up and then it falls back, and then it might, it doesn't immediately fail, but usually there's a test. So I could imagine if this stock moves off of earnings, makes us real clear, maybe either just breaks down a trend line or clears the short-term high from a few days ago here, that would be actionable in an emerging base. That might be safer than, say, waiting for a full-on breakout, just knowing its pattern. But, so obviously I think you'd want to wait for earnings here. But, it's definitely, that 50-day line has been pretty good support in recent months.
And just switching over to the weekly here, Ed, again, we can see that 10-week line catching up to the recent price action. Anything else jumping out to you in terms of the fundamentals here with Embraer?
Yeah, it's up-down volume ratio is a solid 1.3. One thing that's interesting, the number of funds hasn't increased. It's basically been riding, going steady, even though the stock has rallied over the past year. I'd be curious to know, like, so that is one issue, is that why isn't there more institutional funds? Again, Brazil, it's a lot of companies, a lot of funds may not go into it because of that. But yeah, so just have to see how this is supposed to be the big earnings report. So it'll be really important to see how this one delivers.
All right, well, let's move on to Broadcom, which is scheduled to report on Wednesday, March 4th. The semiconductor play is expected to see fiscal Q1 earnings up 26% to 202 per share, and revenue is expected to rise 29% to $19.21 billion. And here's why we're watching Broadcom. We'll be looking for progress on multi-year deals for custom chips with hyperscalers like Google, Meta, and potentially maybe OpenAI. And because those custom chips typically have lower margins, explosive growth here could actually dilute gross margins. over the long term. So we'll be looking at those numbers. And Ed, Broadcom is really kind of seen as the bellwether for that AI infrastructure trade. And it had a massive series of these custom chip deals in 2025. So it seems like the stakes are really high right now for Broadcom.
Yeah, I mean, there's going to be like, well, are you going to deliver? Is that going to continue? We know AI. There's some of this is that some things are out of Broadcom's hands. It's like if people feel like AI spending has to slow down, and there's no signs of that. Let's make it absolutely clear: AI spending is continuing to skyrocket. But I think one reason why some AI stocks have struggled is it's a concern that at some point the hyperscalers will have to back off. But there's not much Broadcom can say about that except they're not telling us that, and that's probably what they're hearing. That's what that's what the hyperscalers are saying. That's what NVIDIA said. But yeah, so that if they get that and can the custom chips really deliver, kind of thing, versus the raw power of, but not as specialized NVIDIA and AMD's GPUs. So yeah, it just have to see about that. Um, yeah, when we come in, the earnings have been picking up, but they're not at the level of NVIDIA. I mean, I think that's another thing is that they're not growing as fast. They're not expected to grow as fast. And that's after not having the massive earnings from a year or two ago, like NVIDIA had. I mean, again, growth has been solid. I don't want to mean anything. Revenue growth has picked up the last couple of quarters. If it has any kind of beat, it'll pick up again. So that would be a positive thing. So there's a lot of good things going on here, but it has to, you know, there's a broader AI concerns, and they really keep that going? And the questions, well, why not buy NVIDIA? Why there's still always that thing is like, why not? If you're an investor, why should I buy Broadcom as opposed to NVIDIA? That's been out there for a couple of years, and it's not at such a discount valuation wise that you'd say, yeah, no, I got to buy Broadcom.
Yeah, we're on the daily chart here, Ed, and it really seems like Broadcom has struggled to advance so far in 2026. It's trading well below the 50 and 21-day lines. Those are both in a downward sloping trend here, and looks like it's trying to hold or test support here at the 200-day line. So, give me your thoughts here because it is basing, but again, seems like it's really struggling to make any sort of move.
Yeah, this is tough. So let's say it rebounds and gets it back above the 50-day line. Well, the 50-day line's falling. I mean, I could see if it gets over, 352, 360, there's some short-term highs, and maybe it then goes because sometimes that happens, but it's just sort of like there's a turnaround. If this rebounds, yes, it'll be on its own earnings, but it's probably because it'll be positive vibes about AI stocks, whether it's NVIDIA or memory chips or the chip equipment, all of which have been showing stronger performance. So the question is that, will people want to get in there? I mean, there might be specific reasons why you go, oh no, they really found out, that this custom, what they're doing is really going to stand out. And, a sort of a shift in expectations there. But otherwise, it might be like, will it be the best merchandise? I don't know. That's the thing. The relative strength line and its recent technical action suggests not, but maybe they can say something on that call, blowout results, blowout guidance, and really signal that they are going to be a real leader uh, in a field where there's a lot of leaders. Let's because there's a lot of things that have been doing really well.
And I just want to jump over to the weekly before we move on, Ed, because as you can see, uh, below the 40-week line here, anything else jumping out to you with Broadcom?
Yeah, and like with things like Nvidia, sometimes this stock has gone on long sideways action. Maybe that's what'll happen. Maybe this will go sideways for a couple months, more months. I mean, that can happen, whether it's because the whole AI trade is doing or it sits out and then it goes. So, uh, you know, great fundamentals don't necessarily mean it's a trigger to buy. And these fundamentals are very strong. I mean, I got a little bit negative. It's like, it's not. It's like they really are doing well. But it's just sort of the technicals aren't signaling that this is the leader right now.
Yeah, we have a 99 EPS rating, a 97 composite rating. Accumulation distribution, not so great at a D. But as you mentioned, it's not like the fundamentals are really suggesting otherwise. But we'll see if Broadcom can maybe make a move here after earnings. But those were some of the top names on our radar. But Ed, there's always more. Let's just take a look at CrowdStrike. We have more cybersecurity coming next week. This reports on March 3rd. And again, we've seen so much of this area, particularly with software, with cybersecurity, just get hammered over the last few months here. CrowdStrike, no different here. It's trading well below key moving averages. So tell me what you're looking for here with CrowdStrike.
Yeah, I mean, want to see this last year was sort of like they were just sort of coming out of the problem they had a couple of years ago. We had that global outage. So maybe they can get it. But people want to see about that specifically, that now the growth is going to pick up again. And it was starting to pick up again the last couple of quarters. But the ultimate issue, can CrowdStrike and software in general shake off that AI disruption fears? Now, software has been bouncing the last few days, but it's done that before. CrowdStrike and the software sector, they've had bounces along the last few months. So just because it's it needs to get a lot. It needs to get above the 40 week. It needs to get above the 10 week. It needs to do those things. And there's a long path just for that. So it'll be important. It'll be good to watch because this is a big name, but probably it's still a long ways from being actionable.
And how about Marvell Technology, Ed? Earnings there due on March 2nd. This one trying to hold at the 200-day line. Looks like it's in consolidation with a 102.77 pivot.
Looks looks similar to Broadcom, and they're another AI custom chip maker. So this one hasn't, this one's supposed to see a slowdown in fiscal 2027 in terms of growth. That's sort of interesting. Why is that happening? Sort of a significant one. But yes, it'll be a lot of the things I said about Broadcom are true about Marvell.
Right. How about MongoDB? They report on March 2nd. Another one, Ed, in that software area that has been struggling. It looks like it found support at the 200-day line. But as you said, it looks like, we'll have a couple of a good days of gains and then, short-lived.
Yeah, I will say that, among notable software names, this is one of the few that even hasn't completely broken down. It's been beat up, it's battered, but it hasn't been destroyed. I mean, it's still above the 200-day line. It's holding around sort of where the prior base was, like several months ago. I mean, this is ugly, okay? But this is the closest you can imagine this one coming back. Like, this one with some good gains, it's not that far from the 50-day line all of a sudden. So I don't see that being in the near future, real near future, but this is one that is doing better than a lot of others relatively into what is a horrible sector right now.
Well, we got one more in the space with Credo Technology. This is another semi name. This one reports on March 2nd here, and again, we just see it struggling. It looks like it's gotten turned away at the 200-day line. So yeah, thoughts here, Ed?
Yeah, and I would just be very cautious. The last couple of earnings reports, there's been positive reactions, at least very temporarily, but it didn't really last. The prior time, it kept on moving for a while. So I don't want to mean it wasn't that bad, but you could get a gap up. It could gap up above the 50-day line, and people will get really excited. Okay, oh boy, here it goes, here it goes. Maybe. I mean, look, the numbers are phenomenal. I mean, they've been there. It's like, yeah, the growth is supposed to slow in the next fiscal year, starting in May. But the fact is that the stock has just been really struggling for several months, and it's prone to these huge moves up and down. It's not just going sideways. I mean, look at that. That is a huge move from, like, I don't know, 220 to one that's it's almost 50% off its high. That's in not too long. So there's a lot of people who bought over 140. So even if it gets up there, you're seeing a lot of people who paid up there and may want to sell. And it just follows. You could buy it at 140, 150, and then it falls to 120 later that day. I mean, that's just the kind of stock it is right now. I know why people are excited about it. I will pay attention to it, but especially in this kind of market, I do not want a super volatile name with some poor performance recently.
And how about we jump on over to AST Space Mobile, earnings there on March 2nd. Another one here, Ed, it looks like it hit a high of 129.89 on January 30th. It's pulled back. It's still below the 50-day line, but it's really tightened up here over the last few weeks. So thoughts here?
Yeah, it's interesting to see. I mean, look, this is losing money. That's an issue. It's losing money, and it's very up and down. It has these big moves. It's had a lot of big moves and then gives up a lot of those gains. The trend has been higher. So if you bought it a year ago, like around a 22, you're very happy. But it's been some wild up and downs. Uh, it's a long way from the 10-week line. The 10-week line seems substantially higher actually than the 50-day line. So even if it gets above the 50-day line, especially in the morning after an earnings report, this one could easily reverse lower. There's definitely been some whippy days where it rises and then falls later in the day. Not necessarily on earnings, but you can see a lot of downside reversals. There's been some upside reversals too, but I could see this jumping up to 95 or 100 and then falling by the end of the day. So certainly at the open, I'd be very cautious about it. It is interesting, but there's not a ton of revenue yet. A lot of interesting stuff, but this one definitely is very, very speculative, I'd say.
Yeah, and how about we look at C Limited reporting on March 3rd? This one, Ed, is another one that's been in a really long downtrend here since last fall, well below the key moving averages. But again, what might this say about the retail market? This had been one of the leading stocks in this area. We could see the nice run that it had, topping out back here in September of 2025.
Yeah, and if you go to a monthly chart, you can see this stock can go on enormous runs, enormous sell-offs, and so it's got a huge run, huge sell-off, huge run. So we don't know where this is going to end. I mean, this is what we talk about. Don't want to try to catch a falling knife because oh no, they've got this and that. Da, 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 da. It's like it's still really rich. If you go back to a daily, it's still just so I can it needs a lot of work. It had really strong earnings, and it's supposed to have solid earnings growth, but overseas, the global e-commerce firms are not doing well right now. They just aren't. Whether it's tariffs or just competition, they're just not doing well. We saw that with Mercado Libre. We've seen that with PDD. Amazon, I don't think its e-commerce business is especially strong, and a lot of that's domestic in the U.S. But so this just seems out of favor. It needs a lot of repair work, and it's just like it's very much in its character to go up 100%, 200%, and then fall 50%, 80%, 90%. So it's not in a good position right now.
All right. Well, let's keep looking at some retail with Costco. Earnings due there on March 5th. This one, Ed, looks like it tried to break out on February 4th with a 993 buy point. Hasn't really advanced much from that pivot point. It's kind of hanging around at that level. So, again, a name that could benefit from some of these tariff refunds potentially. Who knows when that might happen? But talk to me about Costco.
Yeah, I mean, it's trying to break out. It's at a nice situation here. The relative strength line definitely bounced in the last couple of months, but if you go to a weekly, it just hasn't been that great. And this is lagging a lot of other discounters. A lot of other discounters, some of them have RS lines at new highs or at least going sideways. This one, pretty big drop, and it's not like the growth is so tremendous. This doesn't seem to leak with the leader in the discounter field. I mean, it's fine. And then there's been some growth that picked up. So that was nice. It's supposed to slow again a little bit. And but there's that lagging RS line. It doesn't seem like the leader in that space like it was for quite a while.
Well, how about we take a look at Ross Stores? That's ticker ROST because they have earnings as well on March 3rd. Maybe this more of a leader here, Ed. We see this nice trend here. It looks like there was a test of the 50-day line back at the end of January. But another one that if you bought this breakout back in November of 2025, you're in a nice profit taking area.
Yeah, I mean, so you could decide it's a profit-taking area, maybe take some profits. That's a choice if you really believe in it. So no, I'm going to stick with it. The growth has picked up a little bit, but again, it's a little bit like Costco. It's not tremendous, but the relative strength line's at high. So but right now it's extended. So acting very well. You can certainly hold this if you own it. If you want to take some profits because it's gotten to that profit-taking zone, especially ahead of earnings, that's fine. It's up to you, but not in position.
Okay, how about we take a look at Burlington stores at earnings there on March 5th. Uh, this one looking a little bit similar to Costco. It broke out of a double bottom base with a 298.02 buy point. It's still in this buy zone. Looks a little choppy though since that breakout back on January 2nd. So give me your thoughts here.
Yeah, I'm not sure where you would buy this. I mean, maybe if it came down gracefully to the 10, 50-day line and then, had a little thing, maybe a bounce off of that, but it just seems odd because it is a lot of noise in there. Yeah, it's been choppier. It hasn't really gone anywhere in at least the stock or the relative strength line for the past year. So it's not as weak as Costco in that regard, but it's sort of been choppy and going sideways really since like late 2024. So not the leader like raw storage has been for whatever reason.
All right, let's go ahead and wrap with Oracle Ed. They report the week after, but this is going to be our last show of earnings season. Uh, but talk to me about this because, again, another AI name that has really struggled well below the key moving averages. But this will be an important report for that AI thesis here to wrap out earnings season.
Yeah, this one's really important. The stock, it needs a lot of work. I mean, a software maker that it's like, but it's financing so much. I mean, Google and Meta, they're financing out of cash flows. And yeah, they might be borrowing some, but it's not like they don't really have to. But Oracle's borrowing a ton, and they've been fairly exposed to OpenAI. And so there's all sorts of risk there that there's concerns about that. And so this report, can they allay those fears for Oracle and for the whole AI sector that no, that these companies like OpenAI, they will keep that demand and that Oracle can finance it and make money off of that, make it all there. Because this stock has really sold off. And this is one reason why there's been some pressure on names out there. They could trigger a big rally in AI stocks that even though people have nothing to do with Oracle, they don't, but this one will be very important. There has growth been picking up. Look at those, the fundamentals have improved last couple of quarters, but the stock, people are just looking ahead and saying, can they do that? They are burning a lot of cash or borrowing way beyond what their cash flow is. So they're really leveraged, and maybe it all turns out great. And people go, you know what? They've made a big bet, and they're going to make it work. But right now, that is not. That is the market has a lot of concerns. So really an important report for that when that comes up.
All right, Ed. Well, thank you so much for your insights today. And that wraps it up for us for this season of Earnings Cheat Sheet. As always, if you want more market analysis, you can tune into Stock Market Today. That goes live after the closing bell. And thanks so much for watching. And we'll see you next earnings season.